Food price inflation in South Africa is pushing up grocery prices by almost 50%. There's a new trend survey reporting a trend survey which analyzes consumer spending before, during and after the COVID-19 pandemic, and finds that inflation has had a huge impact for people around the country. Let's talk about food inflation and the cost of a grocery basket with the Senior Lecturer and Development Studies Program Coordinator at UP, Marc Wegerif. Good evening, Marc, and welcome to you tonight. Just talk to us about some of the factors that are really making it hard for people to afford a basket of food these days. Of course, inflation chief among them.
Well, let me first just reiterate why this really matters and we should care. You know, we're in a society that has high levels of poverty and high levels of inequality, and close to 1 in 4 children are stunted at the age of 5 simply because they're not getting enough nutrition. And that means their future potential is forever limited because of that. Around half the population simply cannot afford a healthy diet, and this was touched on in your last news story. So when prices go up, it means more people are literally going hungry in our society. That's a disaster, a tragedy for the people directly affected, but also this is having a wider negative impact on the society and the economy as a whole. I can talk about some of the reasons for these increases.
Yeah,
the important thing.
Yeah, and look, I think it's really important that, you know, that sentiment around what is happening and people's lived experiences is so important, because across South African society, and one of the studies we were quoting actually in the beginning was a study that looked at people right across South African society, not those who are the most vulnerable, but people all the way to the top, who reportedly are also feeling, you know, huge pressure on how they're able to afford food these days. But I suppose it's the usual suspects, plus the ongoing crippling war in the Ukraine, that are some of among the major contributing factors. Tell us a little bit more, Marc, about the contextual influences on food pricing.
Yeah, and just to be clear, I mean, the figures that just came out this week show that food price inflation is 14% across all foods, and core inflation is 7%. So the food price inflation is double the core inflation. And for poorer people, they're spending far more on food than wealthier families. So yes, it can affect everybody, but it's the poorest who spend far more on food that obviously feel it in terms of their diet more specifically. Now, the drivers of this are many, and of course we want to blame the Ukraine war, and yes, it's had an impact. It's increased fertilizer prices, it's increased oil prices. It's also contributed to global increases in grain prices, which has been very important. But also at home, we're having things like the load shedding by Eskom is increasing costs to farmers as well as uncertainty. The government is responding to the inflation with the sort of fairly blunt weapon of interest rates increases. But when you increase interest rates, you're directly increasing costs to farmers as well. Farmers operate in a perpetual debt cycle, borrowing in order to produce. So any increase in interest rates is an increase directly in costs to farmers. So some of these factors, like the policymakers and economists I hear often talking about, like the Ukraine war or the dollar-rand exchange rate, as if there's nothing we can do about them. Now, the thing is, we can't do very much about the Ukraine war, but there is a lot we can do about how it impacts on people in South Africa. And I think that's what the policymakers sort of don't want us to look at. And then, as I mentioned, there are other specific issues in South Africa. Another one I want to touch on that the economists tend to overlook is that there's extreme profiteering by a very dominant corporate food sector in South Africa. So while actually since March 2020, the beginning of COVID, food price inflation has outstripped core inflation every month since March 2020, food companies have been making increased profits, not just sustaining profits, but actually increasing profits through the COVID crisis, through the current challenges we're facing in society. So there must be more we can do about that, and maybe that's what we can have a look at as well.
I'd like to stay with that a little bit more, because the overriding narrative is one that you touched on a little bit earlier on. It could be the increase in operating costs. It could be compound factors like inclement weather, whether it is flooding or whether it is drought, all having or putting immense pressure upon the agricultural sector. But when you talk about this extreme profiteering in the way that you are, and talking about food prices outstripping inflation, sometimes even double, how do we keep focus on this issue, and where do we put the pressure then?
Well, I think we do need more state intervention and regulation to deal with the problem. And just to explain what I mean when I say the profiteering, if we look, I mean, we know the challenge the majority of our population have been going through in the last years. Let's say half the population simply cannot afford a healthy diet, and the prices are just increasing daily. The 14% is the overall food inflation. Maize prices for a 2.5 kilo pack of maize are up over 30% year on year. That's a very big increase. But at the same time, Tiger Brands, the biggest food company in the country, in their last report up to the end of September last year, pre-tax profits were up 88%. Earnings per share were up 54%. Dividends were up 18%. So the shareholders were making a lot of money, even as people were struggling to buy. And it's because they've managed, with their dominant position, to push up prices even more than the costs. So even when their grain sales went down, Tiger Brands has managed to increase the price they're selling at in order to maintain and even increase their profit margins.
Well, guess who the next interview is going to be with, Marc?
Tiger Brands. Well, I'd love to be there. Can I stay for that one?
Oh, no, I don't mean tonight, but, based on what you've just said, because often we view information in silos. We look to the economic strength and the investment value of companies across South Africa, because that's good for investment, good for the economy. They can continue to provide jobs, and they can continue to provide product. But when you place it against this backdrop, there are serious questions that certainly can be asked and need to be asked. So we'll circle back to that on another occasion. But I want to come back to, even just optically, you go to the supermarket, and we are in conversation a lot on our program with those who keep a check on the poverty band and how the poorest in our country are able to afford things. But just if you're, if you are a working person, you have access to money to buy food, you're getting so much less in that basket than you would. You're astounded at the prices, but when you really look into the trolley, there's very little there. Along with checking, that correlation between, the share price or results announcements and the price of food, what else can we do to be vigilant about holding the producers and distributors of food to account in our country?
Let's just be clear. I don't think it's the farmers that tend to make a lot of money in this situation. Well, maybe on the maize. And one of the things with maize is that it's pegged to global maize prices. So even when we have high supply in South Africa, people are selling on open global markets for the highest price internationally. And that's where just a simple thing like the dollar increasing, versus the rand in the exchange rate ends up meaning we're paying more for maize. It's not because there was more or less production. It's simply because of something like the dollar exchange rate. And then let's look at but just to make the point that farmers are not often the ones not benefiting. If we just take something like onions as an example, onions have increased somehow 47%, the retail price of onions in the last year, 47%. So that's a big increase. But if we look at the wholesale prices that farmers were getting in our wholesale municipal markets during February, they were getting about R5.40 per kilo for the onion. Yet the onion in the shop, in the formal shop, according to Statistics South Africa, is selling at R22.50. So what is happening between R5.40 going to the farmer and R22.50 as the retail price? That's incredible. I mean, that's a markup of like 250% that they're making. And one of the things I want to come to is something we can do more about it is, we have a project tracking prices from street traders. And street traders looking at like onions also in February were selling at around R15.50. So they were selling on average R7 cheaper than our supermarkets were.
Yeah, and they don't have the advantage of bulk buying.
And this is the onion. This is when you buy, the 3 onions or the plate of onions on the side of the road that you can afford with R5 or R10. But it's still coming in R7 a kilo less than we're getting in the supermarket. So that shows an opportunity also, in supporting the street trading sector or the informal sector more, rather than often sort of condemning it, and we see the Metro Police attacking it and so on. But something I just want to touch on before we close is one of the biggest things the government has been doing to alleviate poverty and with that food insecurity of our people and alleviating hunger is the grant system. And that's great. And so many people get grants and we value that. But one of the things the government's also doing is systematically reducing the value of that grant every year. And that means someone depending on those grants simply cannot buy the same amount of food that they could buy last year or 10 years ago. So while I mentioned, core inflation 7%, food inflation 14% in February, the government has announced increases to the pension funds of just 5.03%, increases to the child grant of less than 6%. So this is even below core inflation and way below food inflation. So we really should not allow the government to systematically reduce that value and therefore the buying power of some of our poorest people, in the way that they're doing.
Well, this is the kind of food we can afford, Marc. Food for thought. Thank you very much for sharing those insights with us. I certainly think that a contrasted debate such as the one you're suggesting should happen. And you make a really sobering point about the street traders who, even though they don't have the opportunity to buy in bulk and pass savings on to their consumers, they are passing savings on in terms of what they can sell or what they sell their produce for, as opposed to the bigger sellers who do have that opportunity and don't. Support the street trader is what Marc is saying. Senior Lecturer and Development Studies Program Coordinator at UP, Marc Wegerif. And I would love to hear your thoughts on this discussion.